All righty, Vanity. We are live, and today is Friday. Everybody knows it's Financial Freedom Friday. We're trying to help some folks get free at Budget Me Black, and I got my clipboard with me today. And so we're gonna coach you to financial freedom. And I have my friend on the line with me today, Miss Vanity Macklin. Hey, Vanity.
Hey, how's it going?
Hey, I'm good. And your last name is not Macklin, right?
My last name is Macklin, but I go by
Okay.
Vanity Lafayette. Lafayette is my middle name.
Okay. I just pronounced her last name wrong. I knew your last name was Macklin, but I was like, wait a minute. Okay, so Vanity is on the line with us today, and Vanity is the CEO of Nothing But Refunds. So y'all check her out when it's time, all right? But she is a tax guru, and I'm so happy to have her on here today. I know a lot of y'all have been hearing all this talk about a child tax credit, and so we've been since the pandemic, we have received several stimulus checks and different things financially that has supported and helped families get through this tough time. And so the next thing that a lot of people have been talking about, we've been hearing about it on the news, is this child tax credit. Okay, and so we want to talk to you tonight. Vanity has all the facts. I just got questions. She has all the information. So I'm not the expert on this topic. She is. And so we're just going to ask her some questions tonight. She's had some questions that's been sent in to her. I have a few additional questions. But Vanity, let's just go ahead and get started. What is the child tax credit? What is it?
Okay, so the child tax credit is a tax benefit that is targeted towards helping taxpayers reduce their tax overall adjusted gross income. So everybody qualifies for a child tax credit. I know a lot of people kind of get that confused with earned income credit. Earned income credit is solely based off the amount of the adjusted gross income, whereas the child tax credit, like I said, is based off of not necessarily the amount of gross income that you made, but also the family size. So even if you don't qualify for the earned income tax credit, everybody qualify for the additional child tax credit. So what it does is it decreases the taxpayer tax liability on a dollar for dollar basis, basically. And we're going to talk about the difference from 2020 to 2021. So I know a lot of people are like, well, what is the difference? What's the difference in the 2 years? So previously, any filing taxpayers or tax couple could qualify for up to $2,000 per child. What they basically did was they allowed children between the ages of any child under the age of 17 now qualifies for $3,600, and any child up to the age of 18 qualify for $3,000. So everybody basically got a boost of around $1,800 per child.
Okay, so this is money that you will receive, not based on your income, but based on the number of children that you have in your household.
Yes, and there's not a cap for children. So normally when you're filing taxes, you can only get earned income credit for 3 children. But with the child tax credit, if you have 7 children, you'll get an amount of the additional child tax credit for each of those children. Oftentimes when it's calculated on our tax return, you don't get the full $2,000 per child because again, while that's the highest cap number, nobody ever get it. So it's calculated based on the amount of income that you have. So for instance, my additional child tax credit for my 2 sons, I may get $3,800 for both of them together. Okay. So it's kind of weird how it's calculated, but we can get into that later as far as the payments and if you'll know if you have to pay that back and all of that.
But so this one doesn't have a calculation. This is just a flat rate. So if you have a child that is under a certain age, you get $2,500. And then if you have a child, I think it's, what is it, like 6 and under or something like that?
So for the new one, it's the ages 17 and under, you get $3,600. And basically if they're 18, then it's going to be $2,000.
Okay, okay. And so how are the payments going to be paid out to us? I've been hearing this, like, oh, you're gonna get it every month, or you're gonna get it for, a certain amount of time. So explain that to me. How are the payments gonna be paid out to us, and then how long will we receive this money?
So for the advance, they're calling it advanced child tax credit payment. They're going to basically take that money and break it up into 6 payments. So for people who saying, well, it's a loan, it is kind of a loan because you can't get it now and then get it again when you file your taxes. So
Okay.
it's an extension of what we've previously got. So you'll basically just get what you always got on your taxes if you choose to receive the payment now. So it's not going to take anything from what you were getting. It's just that you shouldn't expect to see that increase on your taxes if you've already gotten the payment. So the payments are going to start July 15th, and you're going to get a monthly payment for each child all the way through December. So it
Okay.
should be 6 payments,
Okay.
6 advance payments.
So a total of 6 payments. And so
Mhm.
when I file my taxes in January through April of next year, basically they're saying that I've already received my tax credit. Is that what you're saying? Like I've
You
already
re-
received?
you receive the advanced amount.
Okay.
So what would happen is you would basically, it would be the same thing. You just file your taxes and it's like you never got the increase, if that makes sense. You just never got an increase. That's what it is.
Okay. Okay. And so this is an increase on the child tax credit.
Tax credit, yes.
Okay.
Mhm.
Gotcha. I'm following. So then next, so why would I choose to opt into this or opt out of it? So if I say, you know what, I'm not sure about this, I want to, possibly I might want to opt out of it. So why would a person opt in or opt out?
So I would say that if you know, it's several different reasons why you should opt out. The biggest one that I've been getting a lot of questions on is, well, my mom found my child, but throughout the year he lives with me, or my aunt found my child and throughout the year he lives with me. If you are one of those filers that fall into that category where you're filing one of your nieces or your grandchildren or your relatives, I would just, to prevent any kind of confrontations or conflicts in the new year, I would just go in and opt out of receiving that payment and allow that parent to add that child to theirs. Because even if you didn't file all of your children, say if you only filed 3 and your mom filed the other 2, you can go in as the non-filer of that child and add that child to opt in to add that child so that you can receive the payments. It's not necessarily so much as you're gonna owe, but some people do fall in a different income tax bracket. And if you don't know what that's gonna look like, if you don't know if you're gonna get a bonus this year or you're gonna go in, some people, if they know that they're gonna get a big bonus, they'll go in and they'll go exempt for a couple of months so that that bonus is not taxed at a higher rate. Then I would say I would opt out because I don't know what my final finances are gonna look like. And if that's gonna be the thing that's gonna have me either getting a refund, breaking even, or owing the IRS. So if you're one of those people where your finances might change, or you don't know if you're going to have an emergency and say you need to go in and pull money at your 401k, well, you're taxed on that money twice because it's a penalty for it. So that could be one of the things where it's a 5 to 10% increase in your income, your taxable income, and not receiving that credit ahead of time may put you in a situation where either you break even or the amount that you owe is less, or you receive a refund back. So it's different for every filer depending on their financial situation. To some of the parents who have children that are going back to school who was affected by the pandemic, some parents need it. If you're still out of work and you're saying, listen, I have 3 children, that's going to be additional $900 a month for the next few months. I need to use that for Christmas. I need to use that for school supplies. Then yes, I would say stay in it, go ahead and receive the payments, as long as they understand that when they file their taxes, most of the time, if they have children, they may qualify for the full earned income tax credit and the additional tax credit. So they're not going to see a huge difference in their refund because they qualify for the maximum amount of credits. If that's the case, I would go ahead and get it if I need it. If it's something where you're saying, well, I don't know if I need it or not. So I want to just play it by a month to month scenario. Then you can allow that money to go in that account and just sit there. And if you, when you file your taxes, you're saying, well, we owe $2,000 more than what we did last year, you'll have that money available and you can just write a check to the IRS. If it's one of those things where you don't owe and you're saying, well, we're going to get a refund, you'll still have that money there. So if it was me, just because I have been practicing financial freedom, I would allow the money to go into a separate account and just have it as a savings or use it as a cushion. And that way, when I file my taxes, if it's something that I need because I know I'm going to owe, then I would go ahead and use that money to write the check to pay the IRS.
Okay. Okay. So for some of us that owe, would you opt out of it? If you typically owe the IRS based on your current income and nothing has changed, right? So would you say, you know what, if I typically owe the IRS come, January through April of next year, then I will probably opt out of this. Let the IRS keep that money, and then I don't have to owe them, and maybe they'll owe me a little bit of a check come January. What's your thoughts on that?
If you're a person that typically owe, what I would suggest is that you do go ahead and opt out. And what'll happen is that money is not just going to sit there with the IRS. When you file your income taxes, it'll actually still calculate as a credit. So it's either going to do one or two things. It's going to reduce the amount of money that you owe to the IRS, or it's going to give you a refund. So it instead of you getting the payments, and it's almost like you just had it in a bank account that you can't see and you saved it, and you're going to pay the IRS if you owe, or if you get a small refund back, you'll just get that back when it's time for you to do your taxes. But if you typically owe, I would definitely opt out, unless you're going to be prepared to write a check for a tad bit of a larger amount because you did receive those advance payments.
Okay, that's good. That's real good to know. So what do I need to do to opt out, to actually go in and unenroll myself? Like if I wanted to do that, where do I need to go to actually?
So the IRS launched a portal. So if you go to www.irs.gov, the buzz about this is so much. As soon as you get on the IRS page, it's the first thing that you'll see. It's a portal that says the Advanced Child Tax Credit. And it'll have the top will say like to update or change your information, which we'll talk about that later. If you're a non-filer, so say for instance, I filed my taxes, but I didn't add all of my children, it'll be the second tool is for that. And then the third one would say unenroll here. So you'll click on that button, and if you have an account set up with the IRS, which most of us do, you will go ahead and log into your account, your IRS account with your credentials, and you'll unenroll. It's just like you'll check a couple of boxes that says that you understand that you're unenrolling for the Advanced Child Tax Credit. You'll submit the form, they'll get it, and then they'll process it so that you won't start receiving those payments. And you can do it on a month-to-month based scenario. So in order for you to not receive the payments for starting July 15th, you would have had to opt out by June 28th. So for most people, you will get that first payment, but you can go in, and as long as you opt out by the 28th of every month, you can opt in or opt out month to month. You won't receive it for the next month. Now, you don't have to go in once you opt out or opt in. You don't have to go in and update it each month unless you're changing your status. So if you opt out today, you'll still receive the payments that you were going to receive July 15th, but it'll opt you out going forward. And then if it's something where, let's just say some change in your household incomes or anything like that, you say, you know what, I didn't receive the payment in August and September and October, but November and December are the holidays. I want to have a little of that money. You can go back in and opt in to receive it for the next two payments for the end of the year. Or you can just go in and say, nope, I only want to receive the last payment in December. So what you would do is you would just go in and opt in November to receive that payment in December. So once you opt in or opt out, your status will not change unless you go in and change it, but it can be changed month to month. So if it's something you want to do right now because you need to get school supplies, or you just want to see how it works, you have to go in and everybody is opt-in at this point. Okay. You have to go in and opt out.
Automatically opted in.
All automatically
everybody who qualifies. Okay.
Everybody who qualifies, you're opt-in. In order for you to opt out, you do have to log into that portal and opt out. Now, the number one thing to understand is when you get ready to log into that IRS portal to opt in, opt out, you do have to have an IRS account set up. And in order to set up that IRS account, it's very important that everyone know that, one, you must have either a mortgage loan number, a credit card number, a student loan number, or a loan number to a car loan. You have to have one of those four. It's just one of the things that they've kind of started over the last 2 years to eliminate identity theft and fraud. So a lot of people say, well, it won't allow me to set up an account. In order to set up an account with the IRS, if you currently do not have one, you do have to have one of those four primary sources of identification. And that's a mortgage loan number, a car loan number, a credit card, or student loan number. So you can find these either on your statement. So if you finance your car with Capital One, or you finance your house with Wells Fargo, you should get like an e-statement or a monthly statement. You can find it on that. Or you can find it if you have a credit monitoring system like Credit Karma or MyFICO. You should be able to log in and view your latest credit report, or it can be a previous one from this year, and get that loan number off either of those four loans so that you can set up your account.
What if I don't have one of those?
If you do not have one of those, unfortunately, as of today, the IRS do not have another way for you to set up an online account. So you will have to fill out a paper form. They have not generated that form yet. So I don't know the form number, but that would be something to be on a lookout for, and we can look at that at a later time.
Okay, so you would have to get an actual paper form to be able to opt in or opt out.
Yes, and mail it into the IRS, and it's the processing time, unfortunately, with COVID does take longer. So if you're one of the people who would have to fill out a paper form, you would probably have received maybe 2 or possibly 3 payments before you actually opt out. So if that was the case with me, if I didn't have that account, again, I would just use that money as a savings, not touch it. That way, when I file my taxes, if I do owe or something, I'll have that money there, like I received the payment, but I never used it.
Okay, that's good to know. So just so I can just have like a quick little recap. So if I'm automatically going to get the money, right? And it's going to come into the account where everything else is, where my normal taxes will come in. What if I received a paper check? How does that work?
If you received a paper check, you can go to the irs.gov. And again, that advanced child tax credit portal is going to be the first one come up. It's going to have one where it says update information. You can update your banking information. You can update your address. And then, like I said, you can also update dependents. If it's a dependent that you need to take off, you can take them off. If it's a dependent that you need to add on, you can add on.
Okay, perfect. So I automatically get my payments. It's coming into my bank account. I have 2 reasons why I will go to that website. One reason, maybe 3 reasons. One reason is to read and to, expand my knowledge about the child tax credit and understand, right? Besides, of course, you could just watch this video. We have all the information for you. But that's the number one thing, is just to go and understand it. The number 2 is if you need to change information. So you need to add a dependent, add your bank account information, add your new address or whatever. So add information. And then the number 3 reason is to disenroll or to opt out, right? Okay, so I just want to make sure I understood that. So what if I wanted to remove a dependent? Would I do that on that same website?
Yes, you would go in and you would take that dependent off. Now, if you, let's just say, for instance, you file your grandchild, you would basically be opting out. The only way that you would stay opt-in, and again, this is case-by-case scenario, they would have to discuss that with the parent and all of that. But if you needed to opt out of receiving that payment for a dependent, if you don't know if you're still going to file that same dependent, or their family may have grown, or that mother may have gotten married, you need to talk that over with that parent, and then decide, I need to opt out. Because once you receive that advance payment, if you're not filing that child again on your tax return, or you no longer have that dependent to claim or a dependent to claim, you as the taxpayer have already received those advance payments. So it will again have you owing. unless you've paid additional money in on like a federal, or you qualify for some other credits that may offset that.
Okay, okay. And then what if I did not file taxes in 2021?
If you did not file taxes in 2021, they do have a section for non-filers where you can go in and you can make any changes. So say if my family has grown and I had twins in 2020, I have not filed my 2020 tax return, but I do need to add them. They will base it off of your 2019 tax return, and you can just go in and update your two twins, your new babies, so that you can get that payment for them also.
Okay.
So much similar
you
to the
need to add your children. It's not about necessarily if you file taxes or not, but
Yes.
if you filed them in 2019, you just go in there and you're adding your children.
Yes.
You haven't filed your 2020. Okay, that's perfect. Anything else, Vanity? This has been so good. This has been so informative. So anything else?
Everybody know that the targeted payment dates will start on July 15th. I know that some people are saying that, if they have like Chime or NetSpend or some of the other secondary bank accounts that allow you to receive your payments earlier, they could possibly send them as soon as the 13th. That's just something to be on the lookout for. Do not freak out if you do not receive your payment. So if you do not receive your payment on July 15th, the IRS do allow that you allow 5 days since the deposit date and check with your bank to see if your payment has processed. Now, they do not have a tool. The tool does not show you if your payment has been processed or not. They haven't updated to where it will reflect that. They may update that in the future. If you haven't received your payment after 6 weeks, they do have a form called 3911, and that's a payment tracer form. So they're not just going to reissue these payments out. If you haven't received your payment, I would suggest checking every bank account, because some people do change banks. I know people who use one bank account to receive their tax refund, but they receive their money in a completely separate account for your stimulus. Check both of your bank accounts. Also check to see if you're going to get a check in the mail. The IRS are not going to start researching these until it's been 6 weeks. After 6 weeks, you would have to complete that 3911, which is the payment form tracer form. You fill that out, you send it in, and then they'll go back and check, trace that payment and say, oh, well, it was mailed to this address. Now, I just want everybody to remember that anytime a payment has to be traced, or a payment has to be stopped, they would have to issue a stop payment on that check. So if you have 4 checks coming in the mail, or you thought you were going to receive direct deposit, but for some reason it's their man-made systems, it glitches. So I know people that were supposed to receive direct deposits, but they received checks. I know people that were supposed to receive checks when they got their stimulus and they received direct deposits. So it's just kind of one of those things where if you are one of the people who's included in that glitch, what I suggest is that you wait as long as you can up to that after that 6 weeks. And I would check my address. If you know you recently moved, the IRS, they do not forward mail. Do not be afraid to go and knock on that door and say, hey, I lived here previously, and I know that you may not have seen any mail from me. I did forward my mail. However, I'm expecting one of the advanced child tax credit payments for my children. I just want to know if you have it in your stack of mail, because I know that they do not forward IRS documents at all whatsoever. And then if you go and you followed all of those steps, you check your bank account. If you recently moved, you've checked your mail at your new address. You've also checked the mail at your old address, and you still haven't received the payment. Then that's when I say you either reach out to your tax preparer. If you have a tax preparer that have no idea what you're talking about, then I suggest you reach out to me. Go ahead and become one of the Nothing But Refund family. Let me get you taken care of. I will help in completing that form free of charge. We'll complete that form, send it in, and then they'll go ahead and either they'll have to do a stop payment. Of course, it will take a few weeks. I don't have the time frame on that, but we'll go ahead and start the process so that you can receive those payments. That's super important to know. I think.
So you need to hurry up, go in now. If you have moved, so you don't have to go through all this trouble of knocking on somebody's door, right? So if you have moved, go in now, today, and go in and change your address, so you don't have to go through all that trouble. However, if you have any issues, just like Vanity said, Nothing but refunds. I already know Vanity is going to take good care of you. And so she's very knowledgeable, as we have already seen tonight. And she knows what she's doing. She knows what she's talking about. She knows how to file that paperwork. She knows how to get it done. So call her, Vanity. How do they get in touch with you? How do they find you?
So you can follow us on Facebook at Nothing But Refunds. I am in the process of launching my new website. It'll be available August 1st, so you can check me out on Facebook. It will also be linked to our Facebook page, or you can call us at 901-900-6414. You can also add me on Facebook. On my personal page is Vanity Macklin. I'm always sharing the updates from Nothing But Refunds, but if you go in your search bar, you type in Nothing But Refunds, you'll see the page there. I encourage everybody to go and like our page, check us out, even if you already have an accountant or a tax preparer. If you're interested in becoming a tax preparer, we'll have classes coming up in August. So be on the lookout for that. If it's anything that I can do, even if you're not a part of our family right now, I extend the olive branch to invite you to like our page. You can send me a personal message on our business page, or you can send me a personal message on my personal page, Vanity Macklin.
That's perfect. And so if there are any changes, if there are any updates, if the IRS do anything, Vanity usually come on, she either come on live or she'll post something and say, hey, something has changed. And so go ahead, make sure you follow her so that you can stay updated on the latest on what's going on with this child tax credit. Vanity, I thank you for joining me today. And of course, everybody, if you need help with your budgeting, your debt reduction, your savings, same thing, make sure you follow me, Crystal Oliver, on Facebook. Follow us at Budget Me Black. We're on Facebook, Instagram, and YouTube. So we try to do these videos to really just give you information, give you free information. We have some courses that we provide too that we're excited about. We're launching an Everyday Money course, which is for college students right now, college and recent college graduates, teaching them just about how to manage their finances from day to day, you know, just real simple concepts like how do you go grocery shopping? Why do you need a savings account? How do you budget your money? And so we're excited about that. We're launching that on Sunday night. And so reach out to us, budgetmeblack.com, and we will love to support you and help you. Don't forget to reach out to Vanity, Nothing But Refunds, and she is amazing. And so I just thank you so much for joining me tonight. And y'all have a good night. Thank you so much.
Thank you. Bye.